We have Praveen Agarwal. He's the managing director at the company. It's currently, in fact, doing quite well. It's up as much as 18% at the moment, given with respect to its issue price. Mr. Agarwal, good afternoon, and thank you so much for taking the time out. It's certainly looking like a very strong listing. And while we did know and we were aware of the subscription, which was very strong for you, it does seem like, well, investors are very much interested given the kind of premium that we're seeing currently. Sir, if you could just start off by telling us a little bit more about the plans that you have with respect to the proceeds of the IPO going forward and what that can do going ahead for the company going in.
Thank you so much for having me. Thank you so much. Thank you so much. As we are a very focused EPC company, so we have almost doubled our order book since the filing of the DRHP. And we are doing very, very specific niche structural projects. So we foresee a very, very good future for us. And we are working to, going to work very hard and strive hard to achieve the goals that the company has set for us.
Agarwal, can you tell us what your updated order book is currently and what part of this order book are you expecting to execute in this ongoing financial year?
Yeah, so our existing order book at the stage of DRHP was 1,400 crores approximately. And now as we talk now, today we can talk about the new numbers. So it's approximately doubled. So we have an order book of around 2,800 crores, which we have to execute in the next 4 years. And most of these projects are government projects or private developer projects. So we have to perform on time. So we have to complete them on time. We don't have an option of not completing them on time. So we have to, any which ways, grow from here. Our last year numbers were around 160 crores. So we have to go a big way to complete these projects on time. And we are fully capable. Our team is fully aligned. We have all the capabilities to complete these projects on time.
Right, sir. So I'm assuming that at the moment your order book stands at around 2,800 crores. And based on that, you're saying that the execution for this entire order book is over the course of the next 4 years. So specifically with respect to FY25, how much of your execution can come through? And so also if you could give us an idea about the kind of projects that you have undertaken at the moment in general overall.
Yes, so we are doing a sports city. We are doing a 227-acre sports city. We are doing a Madapam-like convention center, which is a 5,000-seater convention center in Gorakhpur for the government of Uttar Pradesh. Then we are doing 6 private developer projects in Mumbai. One of the project we are expecting the clearances to come fast. That is not going on as of now. But otherwise, all the projects are very speedily getting executed. So we'll try our maximum to achieve very good numbers in 25. So we expect a double-digit or more than 50% growth year on year. That is our targets that we have set for ourselves.
All right. So what we did see was a little bit of volatility over the period of FY23 and FY24 in terms of your revenue. Of course, your margins were steady through that between 20 to 24% to 25%. This is what I'm reading from my research reports here. Pardon me, 35% and 32%. So going forward, firstly, will you be able to maintain your margins? And secondly, can we expect that volatility to reduce when it comes to the top line now that you have more projects in store? And can we also expect growth and steady growth over the course of the next 3 years?
Of course. So I will. The last year was a 3% dip, 3-4% dip. That was because what is happening in a EPC contract, the billing, when you complete a project, the billing is a bigger. So we have not completed one big project in the last year. So that is why a little bit of dip was there. So you know that the construction depends on the completion. So the completion stages, the billing is more. That is why a little bit of here and there you will see, but we are consistent in growth and we are focused as a bottom line margin company. We don't work on less margins. So we are very sure that the margins will be maintained and they will grow better.
So a final question. At the moment, considering your order book, are you looking to raise any debt with respect to working capital, or any other long-term plans that you have? And if you could also give us your debt number, if you're comfortable with those levels right now.
Yeah, as of now, we don't have we are a zero debt company. We don't even have working capital limits. So we work on the principle of whatever money we have, we deploy that and we work. So as of now, we don't have any debt, and we are very, very debt averse, and we'll try not to take debt. So we are just taking non-funded limits for the government projects, BGs and all that we need, bank guarantees. Otherwise, we are not a funded, we don't take debt, fund-based debts. And we'll try to stay like that. Yeah.
Point taken, sir. So thank you so much for joining us and taking us through,
Thank you so much.
the financials. And of course, we'll be looking forward to be tracking your company from time to time again. All the best for the future.